Cryptocurrency might sound like something from a science fiction film, but it is becoming a real part of our world. Think of it as digital money. It is a type of currency that exists only online. You cannot hold a Bitcoin in your hand like a dollar coin. Instead, it lives on computers and the internet. This digital money is secured using a special technology called cryptography. This is where the crypto part of the name comes from. It is a very clever way of using complex codes to protect the money and make sure transactions are genuine and secure. It's like having a secret code that only you and the system understand, keeping your digital cash safe from prying eyes. So, how does this digital money actually work in our everyday lives? It all happens on something called a blockchain. A blockchain is like a public record book, or a digital ledger, that is shared across thousands of computers around the world. Every time someone sends or receives cryptocurrency, the transaction is recorded as a block on this chain. This record is permanent and cannot be changed or tampered with. This is a big difference from traditional banking, where a single bank controls all the records. The blockchain is a decentralized system, meaning no single person, company, or government controls it. It's a community-run system, which is one of its most powerful features. Imagine you want to send some digital money to a friend in another country. With a traditional bank, this can take days and involve fees. With cryptocurrency, you can send it directly to your friend's digital wallet. The transaction is verified by the network of computers and added to the blockchain within minutes, or sometimes seconds. It cuts out the middleman, like the bank. This makes the process faster and often cheaper. This peer-to-peer system is what makes cryptocurrency so different. It's about giving power back to individuals to manage their own money without needing a third party to approve or process their transactions. The concept of decentralization is key to understanding cryptocurrency's appeal. In our current financial system, central banks like the Reserve Bank of Australia can print more money, which can affect its value. Governments can freeze accounts or block transactions. With most cryptocurrencies, these things are not possible. Because the network is spread out globally and not owned by anyone, it is resistant to censorship and control. This creates a more open and accessible financial system for everyone, no matter where they are in the world. It's a fundamental shift in how we think about money, ownership, and trust in the digital age. When people talk about crypto, the first name that usually comes up is Bitcoin. Created in 2009 by a mysterious person or group known as Satoshi Nakamoto, Bitcoin was the very first cryptocurrency. Its main purpose was to be a new form of electronic cash that could be sent from one person to another without needing a bank. Bitcoin is often called digital gold because, like gold, there is a limited supply. There will only ever be 21 million Bitcoins in existence. This scarcity is one of the reasons it has become valuable to many people as a long-term store of value. After Bitcoin proved that digital money could work, other cryptocurrencies started to appear. The second biggest and most well-known is Ethereum. Launched in 2015, Ethereum is a bit different from Bitcoin. While you can use its currency, called Ether, to send and receive value, the Ethereum network is much more than just a payment system. It's a platform that allows developers to build decentralized applications, or dApps, on its blockchain. Think of it like the operating system on your phone, where developers can create all sorts of apps, from games to financial services, that run on the Ethereum network. This programmability is what makes Ethereum so powerful and exciting. It introduced the world to smart contracts. These are like regular contracts, but they are pieces of code that automatically run when certain conditions are met. For example, a smart contract could be set up to automatically release a payment to someone once they have delivered a product. This removes the need for a trusted third party to enforce the agreement. This innovation has opened the door for new areas like decentralized finance, or DeFi, which aims to rebuild traditional financial services like lending and borrowing on the blockchain. So, while Bitcoin is primarily focused on being a secure, decentralized form of money, Ethereum is more like a global programmable computer. Both are built on blockchain technology, but they have different goals. Bitcoin is simple and robust, prioritizing security above all else. Ethereum is more flexible and complex, designed to be a foundation for a new, decentralized internet. Together, they represent two of the most important innovations in the cryptocurrency space and have paved the way for thousands of other digital assets, each with its own unique purpose and technology. One of the biggest advantages of cryptocurrency is the control it gives you over your own money. With crypto, you are your own bank. You hold the private keys to your digital wallet, and only you can access your funds. This is especially important for people in countries with unstable governments or economies, where their savings could be seized or devalued overnight. Cryptocurrency offers a way to protect their wealth. Furthermore, the global nature of crypto makes sending money across borders incredibly easy and fast. An Aussie in Perth can send funds to family in Europe in minutes without waiting days for a bank transfer to clear. Another unique feature is transparency. Because most blockchains are public ledgers, anyone can view the transactions that have taken place. You can't see personal names, but you can see the digital addresses that are sending and receiving funds. This level of transparency is unheard of in the traditional financial world. It can help reduce fraud and corruption, as every movement of money is recorded on an immutable ledger for all to see. This open book approach builds trust in the system itself, rather than forcing us to trust a single institution that operates behind closed doors. However, there are significant risks to consider. The value of cryptocurrencies can be extremely volatile. The price of Bitcoin or Ethereum can swing wildly in a single day. This means you could make a lot of money, but you could also lose a lot, very quickly. It is not a get-rich-quick scheme, and anyone investing should be prepared for these price fluctuations. Another risk is security. While the blockchain itself is very secure, individual users are responsible for protecting their own digital wallets. If you lose your private keys or fall for a scam, your crypto could be stolen, and there is often no way to get it back. Finally, the regulatory landscape is still evolving. Governments around the world, including in Australia, are still figuring out how to approach cryptocurrencies. The rules can change, which can affect the value and use of these digital assets. There are also environmental concerns, particularly with Bitcoin, as the mining process that secures the network uses a lot of electricity. While newer cryptocurrencies are using more energy-efficient methods, it remains a topic of debate. It is crucial for anyone interested in crypto to do their own research and understand both the potential rewards and the very real risks involved. If you're an Aussie interested in getting started with cryptocurrency, the first step is to use a reputable Australian crypto exchange. These platforms are like online marketplaces where you can buy, sell, and trade cryptocurrencies using Australian dollars. Look for exchanges that are registered with Austrac, Australia's financial intelligence agency, as this adds a layer of security and compliance. Setting up an account is usually straightforward, similar to opening a bank account online, and you'll need to verify your identity. Once your account is set up, you can deposit funds and make your first purchase, whether it's a small fraction of a Bitcoin or some Ether. Once you own some cryptocurrency, you need a place to store it. This is where digital wallets come in. A hot wallet is a software wallet connected to the internet, often provided by the exchange you used. They are convenient for frequent trading but are more vulnerable to online attacks. For better security, especially for larger amounts, a cold wallet is recommended. This is a physical device, like a USB stick that stores your crypto offline. This makes it impossible for hackers to access your funds over the internet. Whichever you choose, you must protect your private keys or seed phrase. This is the master password to your wallet. When you have your crypto, you might wonder what you can do with it. Increasingly, businesses in Australia and online are starting to accept cryptocurrency as a form of payment. You can use it to buy anything from a coffee to a new computer. You can also use it in the world of decentralized finance, or DeFi, to earn interest on your holdings or take out loans. However, many people simply hold their crypto as a long-term investment, similar to how one might invest in stocks or property, hoping its value will increase over time. It's important to remember that any profits you make may be subject to capital gains tax in Australia. In summary, cryptocurrency is a new and exciting form of digital money built on a secure technology called the blockchain. Major players like Bitcoin and Ethereum offer different uses, from a store of value to a platform for new applications. While they offer benefits like user control and transparency, they also come with risks like price volatility and the need for personal security. For Aussies looking to get involved, the path starts with a reputable exchange, secure wallet storage, and a clear understanding of the risks. As with any new technology, education is your most powerful tool.